Hello, everyone. Happy Sunday. Happy Thanksgiving week. There's a lot of interesting things to look at in the market. We're going to take a look at seasonality-wise, how well the market tends to do during this week. We're going to look at some interesting statistics of seasonality, as well as some interesting things that I think may end up happening. So we're going to take a look at the large tech stocks, the VIX, the bonds, and the indices. So it's going to be a pretty fun video. Without further ado, let's get started with the video. Get some popcorn, enjoy your night. It's going to be pretty fun. All right, so let's enjoy. So currently, we can see the S&P 500 is in an uptrend. The futures are currently green, and the market opens in about 12 and a half hours. So we're going to see if it remains up here, right? But the main thing is that currently, we've been monitoring this uptrend from August 5th. We connected it to September 11th's low. And all of last week, we were essentially monitoring this trend line. And almost every single time we were above it, or we tapped into it, or we opened at it, it was almost like a clear-cut, amazing shorting opportunity. Currently, you can clearly see that we are above this trend line. We have opened above the trend line. We're currently trading above it. We have to see if this is going to remain for the next 12 hours. I don't know for sure, but that is the interesting thing. The other thing is that, clearly we're jumping into a major level of resistance. But before I give you guys my thought process, what I first want to do is, historically, how well does the market do during Thanksgiving week? So I shared this graph here, this table of the percentage increase or decrease during Thanksgiving week for the past 20 years. And we can see that for the 14 out of the past 20 years, Thanksgiving week tends to be bullish. Albeit, there were certain weeks that it was a very, very minuscule increase. So, for example, 2009, 0.01%, 2013, 0.06%, 2015, 0.05%. So, technically, they were bullish. How bullish? Barely, but 14 out of 20 is still 70% of the time things are bullish during the week of Thanksgiving. All right, so we have to look at the data. Whether we like it or not, it is what it is. That is the data. Now, seasonality-wise, this is a chart of the S&P 500 over the past 20 years as well. And someone sent me a message on WhatsApp. But as you can see, during the month of November, into the middle of the month of November, I was bearish. According to seasonality, we get a pullback. But then heading into the end of November, into December, things are technically bullish. Whether that's going to continue again or not is yet to be seen. But seasonality-wise, things tend to be bullish. So we're going to have to see how bullish they're going to be, okay? So now going back to this data, what I wanted to look at was, all right, so cool. In 2021, we had a very red week. Why was that? So what I did was I looked at how the market was set up, the technicals of the market, how the market was essentially looked. And I wanted to compare that to what it looks like today. So that's what we're going to do. So guys, just take a mental note of these dates, November 22nd to November 26th. These last final dates are the Fridays. So that means Thanksgiving is the day before. So that means Thanksgiving was on November 25th. Okay, so let's go ahead and take a look at this. But first, we're going to take a look at what the market looks like currently. All right. So right now, to be fair, this is a chart of the S&P 500. We can clearly see that we are gapped up above a major trend line level of resistance that we've been tapping on for the past week. And before this level was support, last week it was resistance. And we could see what ended up happening the last time we bounced over it. It just catapulted up into new all-time highs. Whether that happens again is yet to be seen. But currently, this is technically a bear flag. We're retesting around the 786% fib from the all-time highs into the lows, right? So we're tapping at the 786% fib level. Still technically a bear flag. Generally, if we close above the 786% fib level, a bear flag is generally null and void, and we end up making new highs. I think it was around 75 to 80% of the time, if we end up closing above this 786% fib, we end up making into new highs. Okay, but currently, we have what I want to show you guys is that it's not as if we're trading up here. Okay, we're still at a level of resistance, and the 60.55 level on the ES is very, very major level of resistance. It coincides with a major JP Morgan collar trade for the end of December. So the 60.55 strike is a major, major level of resistance, and we're looking to tap into that potentially this week. What does that mean for the 2021 setup? Okay, so currently, just remember, we are falling off of prior, like a recent high, and this is a bear flag. Technically showing a lot of bullish power, but it's a bear flag nonetheless. We have not crossed and closed above it. So let's go ahead and take a look at what 2021 looked like. So 2021, sort of similar. We were at highs, right? During 2021, we were at highs. The week prior, we had highs, made a pullback, and then on basically, so the 25th was Thanksgiving, the 26th is Friday. So what ended up happening on the 26th? A major red candle. So we had a high during that week of Thanksgiving. We ended up making a high, but then after that high, the market ended up dropping. So it's not a complete carbon copy of the setup, but this was also a bear flag, right? You could see that this was a bear flag, and we ended up making into highs, but then as those highs were made, we wicked. You could see that we wicked above, right? And these wicks ended up being a really, really big bull trap for the market. Because historically, back in 2021 as well, 2021 was one of the red years. The 20 years prior to 2021, I'm sure it was all green, right? It was much more green than it was red. So as we ended up making highs above the November 5th, 2021 high, right? This was a bull trap, essentially, and this caused a major downturn into the beginning of December. Is that going to be something that occurs again? That is yet to be seen. So that is something that's really interesting. This was 2021. So now, just to be fair, let's look at 2023 and 2022, okay? Let's see what the market looked like during these times as well. So November 24 and November 25 for 2023 and 2022. This is what the market looked like during November of, during Thanksgiving week. Does it look the same currently? Not really. Definitely does not look the same. Currently, if we just go back to the current market structure, we have just continued to make new highs. But if we go back to 2023 here, clearly this is not continuing to make new highs, right? So it doesn't look the same. So let's go ahead and look at 2022 then. 2022 is November 23rd, right? 2022. Hey, I have a random ES from 2022. Nice. Okay. Does this sort of also look similar? Not really, because we are also not at highs, right? Like the market was at a downturn, and then heading into Thanksgiving week, we were sort of bouncing off the lows, right? You could see that we made a falling wedge, and we are just starting to bounce off the lows. We had, if you guys remember, this was Jackson Hole in 2022. Jackson Hole was the monster bearish move that a lot of people were not ready for. And yeah, what a beautiful time in the market that was, to be honest. But we caught this bottom. I think we ended up going short over here. Yeah, we traded really well during this entire time. But Thanksgiving week during 2022, is the market similar to now? Not really. But all of these are basically showing that the market tends to be bearish, especially when the market is super bullish like this. If we end up making new highs. So the main thing, okay? The main thing that we have seen, unless it was, except 2023, was that when we were making new highs, these ended up being bull traps. So if we made a new high after Thanksgiving, it was a bull trap, and it ended up being a pullback opportunity. So a lot of different, like, I understand a lot of different conflicting narratives, etc., but the main thing, guys, is like pragmatically, we're not in the same market structure during 2022 or 2023. Let's just go back and look at 2023 one more time so you guys get a really good understanding of what I'm talking about. This was not a bull trap. The massive upswing above 4,600 on the ES was not a bull trap. When we gapped up like this, it was not a bull trap. But if the market is making some sort of normal structure, and then we get a monster like move to the upside and a green move, that is not a gap up, it tends to be a bull trap. 2023 was not. So now going back to where we are currently. JP Morgan collar trade is at 60.55, which coincides basically perfectly with prior all-time highs. We're at a sort of bearish inflection point. So what we've seen during the red months or the red weeks, or during these, the green weeks, unless we gap up above highs, unless we gap up above this high, green moves above here tend to be bull traps. I don't want to just be a complete bear, right? But we can't ignore the fact that there were good shorting opportunities heading into the strength for Thanksgiving and post Thanksgiving week. So currently, we see that the market is currently green. It's gapping up. That means that all of the other large tech stocks are also going to be green and most likely gapped up if the market stays like this. So with that being said, that's the chart of the ES. We're tapping and trying to close above the 786% fib level. Whether we do or not is yet to be seen heading into tomorrow morning. The NASDAQ doesn't look as great. It's not at the 786. It's more at the 618. So we can see that it's trading actually between, it's actually 618, yeah. So it is at the 618. It's tapping. Not necessarily the best sign for the NASDAQ. It has a lot to do with certain tech stocks that are beaten down. We're going to take a look at those as well. And the Russell is doing very well. So the Russell, especially heading into December, January, the Russell 2000 does very, very well. That's why a lot of penny stocks do really, really well in December and January. It's because the Russell does very well heading into the end of the year, into quarter one. The Russell does very, very well. So the Russell is clearly leading as well. You can see that the Russell is up 1% compared to half a percentage on the ES and the NASDAQ. So that is currently interesting. But the main target is these large tech stocks. And why are the large tech stocks? Why is the NASDAQ underperforming? It's because some of these large tech stocks are getting beaten down. So, number one, so Microsoft is actually at the lows, but it's starting to show some sort of a bottom, right? It's starting to show that this is a bit of a bullish opportunity on Microsoft. If we could end up breaking above this downtrend line on Microsoft, this can start to bounce, right? Google, however, is not doing too great. There's still more room to the downside on Google, especially, and you can see that this is just, it is. The MACD indicator also looks like it's about to break below the zero line, which is really, really bearish. And you could just see that the momentum is not, it doesn't look like it wants to bounce just yet. If stocks like NVIDIA is also showing a bit of bearishness. This is not a bullish setup on NVIDIA. Going long over here is not like an amazing opportunity, right? AMD, same concept. This is not an amazing opportunity to go long on AMD. You can still see that there's a lot of bearish momentum. Yes, even the MACD, the fact that the MACD is starting to show bullishness this sensitively while there's barely any movement to the upside is not a good sign, in my opinion. So these are not solid, amazing setups. And these are like the AI stocks were the reason why this entire move to the upside happened. Currently, this move is being fueled by stocks, for example, like Netflix. Netflix is skyrocketing to the upside, and Netflix is doing very well. Actually, interestingly enough, seems like it has a lot to do with the Jake Paul and Mike Tyson fight. It's just skyrocketed since then. Let's take a look at Amazon and the rest as well. This is not a long opportunity on Amazon. Let's take a look at Meta. Same concept. Is this a long opportunity? Does this look like a definitive time to start going long? There's more room to the downside. Yes, we're holding support, but is this the time to start going long? That's the issue currently with a lot of these large tech stocks. And last but not least, let's take a look at Apple and then Tesla. Tesla's doing well also, but Apple also tapping on resistance. We're wicking at levels of resistance. This is the 50% fib from this move, most likely around the 50, 60. So same concept as a NASDAQ. We're tapping above it. This is not a break above, but then Tesla is doing well. Tesla is doing well primarily because of Elon Musk and Trump's partnership. So that's, of course, if you guys didn't realize before, I'm sure you did. But is Tesla going to continue pulling the market up? Is Netflix going to continue pulling the market up? Our stock, it's not even, the issue is that these large tech, I'm just going to start talking now, but the issue is that these large tech stocks, guys, they aren't even giving good longing opportunities. The momentum is still very bearish, in my opinion, on these large tech stocks. So it doesn't look that fantastic unless, we are gapping up in the after hours. Google, let's see what the rest of the tech stocks do. But this is not like an amazing opportunity to start going long, in my opinion. And let's end up seeing, honestly. Like, I would rather... So, this is Google, right? Where would you rather go long? Would you rather go long Google? Or would you rather go long a stock, for example, like Baba? Baba, way better setup. This is a falling wedge. We basically are at a level of support here. And the Chinese market, the Chinese market is very manipulated. So if the Chinese market is very, very beaten down, etc., like there's always injections into the Chinese market. So even then, Does Google look like a better long opportunity than Baba? Not really, to be honest. So I'm not really too sure what the play is, honestly, with these large tech stocks. How much this week is going to be very interesting. Honestly, this week is going to be very, very interesting. What we could look at now is the dollar. The dollar is red currently, and we know that the dollar has an inverse relationship to the market. Generally, it has not been recently, but when the dollar rises, the market tends to fall. We're currently seeing the dollar fall. So if the dollar falls, it's generally bullish for the market. It hasn't had the best correlation, but it is what it is. That's the dollar. The bonds still just beaten down. The MACD indicator is starting to pull upwards, and the bonds are important to look at because when the bonds are basically the bonds and the overall market are correlated. They have not been correlated recently, but if the bonds are starting to do well and it breaks above levels of resistance, then it will show strength in the overall market. That tends to happen. Now, another thing I want to look at is the U.S. 10-year yield. So the yields are starting to break down lower. So one of the main issues that we see right now in the market is that the high yield bonds are not making highs. So the high yield bonds also tend to show some sort of correlations to the market, but the market is making highs, the yields are not. So the bonds are, the HYG is not making highs. So this is not the best situation for equities, in my opinion. So yeah, we're holding support, but this is just a really, really interesting time in the market. The yields are rising, the dollar is rising, the bonds are rising, and the equities are rising. Something has to give. Something has to give. I'm not going to just be a complete doomer. Obviously, we're going to make money as the market moves up and everything also. That's without a doubt. But we have to look at things for what they are. And this is a very, very momentous. This is a really, really interesting time to gather experience in the market. We're never going to see 2024 again, right? So things like this, they don't happen many times. They happen at really, really important market conditions. And looking at the market like this, analyzing why certain things are happening, what is going on with equities in correlation to the bonds, the yields, etc. This is really, really valuable experience, because when we look at this 20 years down the line, this can be something that we look back on and be like, wow, in 2024, all of these same things were occurring. What ended up happening afterward was the market did X, Y, and Z. So we're going to have to see what the next steps are in the market. Last but not least, let's go ahead and take a look at the VIX. The VIX is one of the more cleaner inverse correlations to the market. So if the VIX is rising, the overall market is going to be falling. Currently, the VIX is still trading above this really, really major important level of support at 13 to 13.50. $14 range. Obviously, the VIX is the VIX is obviously going to be red if the overall market is green. So we're going to have to see if we end up, how much lower we end up going on the VIX heading into tomorrow. But so far, the VIX doesn't really look bullish either. So if the VIX is bearish, the overall market is going to be bullish. So that's my thought process. A lot of these tech stocks look garbage. The ES is gapping up into a level of resistance essentially, and 70% of the time, the week of Thanksgiving tends to be bullish. So currently, we are technically for the week, if we end up opening at 4.45% green, we are already at 0.45% green for the week. Now, I think one of the easier trades to do is if during this week the market ends up if by Tuesday, Wednesday, for example, the market ends up going down like below positive, then we can play the retracement back up into green, because technically 70% of the time the market has to be green. So if this number, instead of 0.45% green, was 2% red, I would be looking to go long, because the odds are in our favor for a green close of the week. Does that make sense? So, this week is going to be pretty interesting. I'm going to be on voice chat tomorrow morning as well. It's going to be a fun week. Let's see what ends up happening. But overall, that's my thought process of the market. Let's just end it off with GameStop. GameStop, I am, this is not financial advice. I'm not your financial advisor, but GameStop, I really, really like it. And I am just going to continue to buy into 2026, 2027 calls on GameStop, and just going to continue playing the run-ups. This May, we caught a 4,500, some people call it a 6,000% move on GameStop, and it worked out phenomenally. So, in my opinion, the GameStop options are going to give a much higher return than any crypto currently, because crypto is already at all-time highs. Bitcoin's at 100. It could go to 150. Cool. Solana's at 250. It could go to 1,000. Cool. That's only a 400% increase. Ethereum can go to 10 to 12. 3, 4, 500% increase. Congratulations. GameStop options went up over 4,000, 6,000% on this prior run-up. So if we're getting into calls, this is going to be a much bigger percentage gain than crypto. And I really like the stock. So let's see what ends up happening. I hope that makes sense. Let's see. All right. So I hope you guys enjoyed today's video. A lot of information dump. I get it. But it is 10 o'clock on a Sunday night. I wasn't expecting to make this video, but I did anyway. So I hope you guys enjoyed it. Please make sure to like, comment, subscribe, do all that good stuff. And I will see you guys bright and early tomorrow morning. Thank you. Have a good one.